So thanks to those big promises from Europe, the music was still playing and everyone dancing during our local session. Earlier I spoke to a rather unconvinced Marcus Padley from Patersons Securities. Well, Marcus Padley, the Australian market has rallied again. Have we finally reached a decisive turning point, do you think?
Well, that's the billion-dollar question of the month, Chicky, or maybe the year, or maybe the decade. But I think it's too early to say, really. The market's down 23% its worst. We've bounced 10.1% in 4 or 5 days. It's just happened too quickly for anyone really to have got on board. There are a lot of people out there who are probably thinking, oh, am I the only one who hasn't bought it? You're in good company. It's happened so quickly. And you know, it's being dismissed as a bit of a short covering rally, but the bottom line is it's just too early. If you were a technical analyst, you'd be saying, yes, the market's in short-term uptrend, but from an investor's point of view, on a longer-term time basis, a weekly chart, you simply can't say that yet. The market's got a heck of a lot of work to do. Plus, there's no real fundamental reason for the change. Are the French and Germans talking to each other? Is that enough to turn the whole market? Difficult to believe at this stage. You know, no problems have been solved, particularly in Europe yet.
Resource stocks were pretty strong. What was behind that?
Well, it's fairly obvious as traders get involved trying to catch the rally. The stocks that have fallen the most have been the resources. If you look at the resources sector from the very top, after that little Chinese wobble last month and those very sharp falls in metal prices, that sector got belted the most. The sector's been down about 33% against industrials down about 15% since April. So it's the obvious playground for traders. Whether anything's changed, you know, those metal prices still firmly in downtrend. It might be a bit early to go yet, but certainly a few people are having a crack.
Some of the healthcare stocks were also down. What's going on there?
They're the stocks that perform particularly well in the fall. Healthcare, things like Telstra, Woolworths, all stocks that are really being ignored in the rally. They're defensive stocks, although the truth is there are no defensive stocks for retail investors. Cash is the only defensive stock, but basically being left out because they're low beta, low volatility, not sexy.
You mentioned Woolworths as another defensive stock, and that, as you say, was down.
Yes, their new CEO took over on the 1st of October. They published his salary today, $1.9 million, which he can afford to double with performance bonuses. That's somewhat less than his predecessor, who got $5.73 million over the last year and $8.33 million the year before. But of course, with a $3 billion company, if the Woolworths share price moves 1 cent, it's worth $12.2 million to shareholders. So all that the new CEO, Grant O'Brien, has to do is move the share price about 0.3 of a cent, and he's paid his salary.
Marcus Padley, what a place to be. Thank you very much for joining us.
My pleasure, Tiki.